Hello, my name is Alistair Day and I'm the trainer for Mastering Financial Modelling. I am the author of various standard textbooks on financial modelling published by Pearson Financial Times, such as Mastering Financial Modelling, Mastering Risk Modelling, Mastering Financial Mathematics in Excel, and Mastering Cash Flow Modelling. What I want to do is just give you a quick introduction to this course on financial modelling. What we do is try to train you on how to write your own models, because so many models fail due to inadequate structure or user error in some way. So given that we're trying to write a corporate finance model, what we do is we take a case of a public company and we try to do a valuation on it. So we produce a cash flow valuation model. So starting off, we produce the template and we evaluate the historical statements for the company, and we generate a cash flow and a ratio so we can have a look at what kind of margins they've been producing, what sort of profits, what sort of loans and debts they have, and what sort of cash flow. Then what we do is we take it forward and we look at various forecasting methods for how you can forecast those statements forward. So generally we do a 5 or a 10-year forecast, and then we try to value it and compare the valuation we get with the current share price. So the idea is we do the forecasts, we look at the drivers, what are the important drivers on the course, and what we do is then to produce the forward financial statements for the company in terms of a 3-statement model, an income, a balance, a cash flow, and then finally the ratios. Then we look at cost of capital calculations, and we try to generate either a sector or a company cost of capital in order to discount those cash flows, and then look at terminal values in order to generate a final value for the company, which together with the present value of the cash flows will generate for us a free cash flow valuation. Then what we do is we do some adjustments against it and we compare it to the current share price. Having got to those single point answers, what we then want to do is look at the variation, the sensitivities on the model, and put in some Excel techniques for being able to generate those sensitivities quickly. And then finally, what we want to do is do some reporting so that we can then communicate the results to other people to look at what the valuations are, because nobody wants to look at a 50-page Excel model. They'd much rather have a 1 or a 2-page summary on the main findings. And that will then take us through the entire structure, the entire method of building this type of model. Okay, so hopefully that generates a few questions, and Kapitalbiz will be very, very pleased to answer the questions for you, and we will get back to you very soon. And once again, my name is Alistair Day. I'm the author and I'm the trainer for the Mastering Financial Modelling course, and I look forward to seeing you on one of these courses very soon.